Here's the English translation as requested, each sentence on its own line. The global gold price frenzy has truly become the center of attention, and today we will explore this topic in greater depth together. On January 24, 2026, gold prices are holding at a record high, nearly touching $4,900 per ounce and just one step away from the $5,000 milestone. It is hard to believe that this figure has surpassed every historical peak we have ever witnessed, isn't it? To better understand this phenomenon, let's take a closer look at what has pushed this precious metal to such unprecedented heights. In recent days, the gold market has experienced an extremely strong upward momentum. Just yesterday, gold prices at one point surged to nearly $4,988 per ounce before slightly correcting and stabilizing around $4,960. This is not merely an ordinary fluctuation, but the result of a series of overlapping global factors. The U.S. Federal Reserve Fed has become the focal point in this context. Over the past few weeks, the Fed has faced unprecedented political pressure. An investigation conducted earlier this January has raised serious concerns about the institution's authority and policy decisions. As the Fed's independence has been called into question, investors have begun searching for safe haven assets, with gold emerging as the top choice. Capital has poured heavily into gold as a way to protect wealth against unpredictable instability. This demonstrates that whenever markets become volatile, gold continues to serve as a lifeline for investors. Inflation, in particular, cannot be overlooked. When inflation rises, the purchasing power of currency declines, and gold becomes a store of value. Many people may not realize that historically, gold has always been viewed as a hedge against inflation. This explains why gold prices often trend upward whenever inflationary news emerges. We have seen this clearly in recent months as the U.S. Consumer Price Index (CPI) has risen, prompting many to rush into gold to safeguard their assets. In addition, geopolitical factors shaking global financial markets must also be mentioned. One of the current flashpoints is the escalating trade tension between the United States and the European Union, particularly surrounding issues related to Greenland. These tensions have created a highly volatile environment, making risky assets such as stocks less attractive. When investors feel uncertain about the future, they often turn to gold as a safe solution. The complex situation in the Middle East and ongoing frictions in U.S.-China relations are also maintaining a risk-off sentiment among investors. Whenever negative geopolitical news emerges, gold prices are pushed even higher. For example, just last week, news of a military attack in the Middle East caused gold prices to surge immediately. This highlights how concerns over global economic security having a significant impact on gold prices. Furthermore, many large institutions and central banks are actively purchasing gold to protect the value of their national currencies against external shocks. Emerging economies increasingly view gold not only as an investment asset, but also as a tool for preserving value. This has led to a strong trend of gold accumulation, particularly in countries such as India, China, and Russia. These nations have significantly increased their gold reserves amid global economic uncertainty. In fact, India has become one of the world's largest consumers of gold, with millions of people viewing it as a symbol of prosperity and wealth. Another crucial factor in this environment is the weakening of the U.S. dollar. As confidence in U.S. policy declines, other countries are seeking to diversify their foreign exchange reserves. A weaker dollar, by nature, makes gold priced in U.S. dollars cheaper for holders of other currencies. This not only stimulates demand, but also pushes gold prices higher. Moreover, the weaker dollar makes it easier for foreign investors to purchase gold, creating a new wave of demand for the precious metal. In summary, the record-high gold prices we are witnessing represent a comprehensive picture shaped by multiple factors. These include uncertainty surrounding Fed policy, heightened investor anxiety, global geopolitical hotspots, and strong buying pressure from central banks. Can gold conquer the $5,000 mark and continue its upward journey? This will undoubtedly be one of the most closely watched stories in the financial markets in the coming days. This analysis reflects personal opinions only and is for reference purposes, not investment advice. You should conduct thorough research before making any decisions, and remember that no one is responsible for your investment choices but yourself. Thank you for taking the time to follow along. If you find this information helpful, don't forget to like, share, and subscribe to the channel so you don't miss the latest updates on the gold market and important economic news. See you again in the next videos.